There we are. Thank you,
You
Michael.
here?
Go ahead.
Okay. Let me share my screen.
Got it.
Excellent. Glad to hear it. Okay. So the subjects I want to talk about, first of all, a little background to what's happening in the payments world that's making pre-validation and agreement of terms a more interesting topic than it was before, which it must be said was not difficult because prior to the new changes in the global payments landscape, pre-validation was, well, what's that, people would say. Then I want to talk a little bit about the BIS CPMI initiative to try and propose a taxonomy of different types of pre-validation to help orienting us in our discussion. I want to talk about how pre-validation messages, or indeed the taxonomy of pre-validation, maps onto the ISO 20022 standard, because that's also an area where there are quite a lot of changes going on, not all of which have yet made their way through to the standard, but you can expect that they will be in the future. Then I want to talk a bit about Mojaloop and pre-validation, and finally talk a bit about next steps. I also want to say that I'm happy if people have questions. I will try and keep an eye on things and answer them as we go, but I won't necessarily be able to see, I can't see people's hands going up on the screen at the moment. So if you want to ask a question, then please just ask it. Okay, so let's start by looking at the background. As I say, pre-validation is really a new concept in the payments world. International payments, and indeed ordinary domestic payments, generally speaking, did not have any form of pre-validation. Essentially, what the sending party would do would be to throw a bunch of stuff over the fence where it would land in the receiving party's digital garden. And the receiving party would take a look at it and perhaps do something about it, and perhaps not, and perhaps respond to the sender to say, I'm going to do something about it, or I'm not going to do anything about it. Nobody really knew. That was it wasn't very good, even for high value payments, even when you had large payments which essentially could absorb part of the cost of people looking at these things manually. Even then, it wasn't very good. And when you start to think about how that works in the cross-border context, it's even worse. So another concept in the global payments world is what's called straight-through processing, or STP. And STP essentially says you should be able to execute a payment automatically. That is to say, without any manual intervention. Now, obviously, in the Mojaloop world, when we're dealing with very small amounts, or comparatively small amounts in transfer, we can't afford for people to need to be involved in figuring out whether a payment's going to work or not, or in changing it so that it does work. It's got to be an automated process. Otherwise, there is no way in which we can make it cheap enough for the kinds of customers we want and the kinds of transfers we want. However, this is a concept which is now starting to filter through in the world of more general global banking, partly because it's a key to cost reduction. If you can execute a payment automatically by interaction of different systems, then obviously it's going to be much cheaper than it is if you have to hold a payment up. Someone at one or other of the parties involved, or perhaps somewhere else, and needs to do some work, make some changes, reissue the thing, it's going to become very expensive. A recent survey said that the cost of remediation, whenever something needed to happen, was roughly $12, which doesn't sound like much. But in the context of that we want to talk about for payments, it's a lot, particularly when you consider that, broadly speaking, banks want to know that every transfer is a profitable transfer. So, straight-through processing is something which needs to happen. And in particular, because there's considerable focus at the moment on how to reduce costs for cross-border payments. Now, there's, I don't know if any of you have come across it, but there's been an initiative that's been running for several years now, originally from the Financial Stability Board, which said essentially the cost of cross-border payments is too great and it needs to be reduced. There is a target value that says in every corridor, 3% should be the maximum cost for sending a cross-border payment. Now, it's got to be said that this initiative, though there's been a lot of hurrying and scurrying done, hasn't yet delivered very much in terms of actual reductions in costs. And the problem is that these costs are much worse in the environments where we operate and want to operate. Now, if you look at the current cost of cross-border payments in Africa, it's about 7%. That's significantly more than the global average, which I think is around about 5.5% at the moment. But that's skewed because the very large payments that go between Western economies. So the amounts that we talk about are quite small in those contexts and don't really have a very big effect on the overall average. And in fact, when you talk about cross-border payments, which eventually wind up as cash, the situation is even worse. The cost there, the average cost in Africa at the moment is about 9.5%. So there is considerable room for improvement. And it's something which even the international financial community has decided to do something about. Just want to look at a brief case study. I came across this. This is a payments app in the Maghreb, that is in the northern part of Africa. They report that after deploying all the solutions, they observed an 84% success rate for unique transactions. I mean, so that is considerable. I have to say that this is a press release where they are congratulating themselves. They say it's impossible to achieve a 100% success rate because of things like insufficient funds, people declining transactions, the amount exceeding credit available, transactions cancelled by users, and other things too. And you can see a list of the breakdown of those failure reasons, all of which I think we will mostly recognize. So they think success looks like a 16% failure rate for transactions. I'm happy to report that the last I heard from Liberia, current failure rate was 0.03%. Now, I'm not going to say that's all due to the agreement of terms, but it's all due to the agreement of terms. So, we can see that there is a significant room for improvement, even in African payment systems. Still more in global payment systems. So now I want to talk a little bit about the CPMI initiative. Now, CPMI stands for the Committee on Payments and Market Infrastructure. It's essentially a subcommittee of the Bank of International Settlement, and it does lots of good stuff relating to the promotion recommendations about particularly the efficiency of payments, thereby, of course, supporting financial stability. Unfortunately, well, sorry, it's not unfortunate. It's unfortunate for us that its members are central banks. If I recall correctly, that means that the only African central bank which is a member of CPMI is the South African Reserve Bank. So it's fair to say, I think, that our target jurisdictions are underrepresented in this area. However, there is something called the CPMI PIE Task Force, Payments Interoperability and Extension. Now, that contributes to the G20 Cross-Border Payments Programme. It works to look at how payments can interlink across borders, but most important for us, it includes both central banks and private sector institutions. Now, as you will doubtless imagine, most of those private sector institutions are large international banks, Deutsche Bank, JP Morgan, those kinds of people. But some of them are not. And indeed, one of the members of the CPMI PI task force is the Mojaloop Foundation. Now, what is the task force doing? Let's look in a bit more detail at that. It's broken down into task teams. The first one, which I have to say we're not very interested in contributing to, we the Mojaloop Foundation, but is doing some interesting things, is improving cross-border settlement. Now, this is not terribly ambitious at the moment because it's mostly to do with opening hours of settlement systems, which, as you can imagine, in the global context is problematic, particularly if people are using correspondent banking, which means that you may be using settlement systems in several time zones. So arriving at a settlement window when all of the settlement systems are open may be a considerable problem. So it's a good thing to do, but it's not necessarily something that we are completely fascinated by. Second task team, promoting fast payments and what they call one leg out schemes. Now, you may have come across, there is a one leg out scheme currently working that goes from Spain to, I think, North Africa. And essentially what it does is it enables those of you who have been assiduous followers of the development of Mojaloop may recall the term cross-network provider, which at one stage we thought of as an institution who would field payment requests from one network, transform them and issue them to DFSP in another network. We have, I should say, a worrisome relationship with that concept now, particularly because it doesn't support end-to-end non-repudiation signatures. However, the one leg out scheme is essentially a cross-network provider. So the idea is that any European members of SEPA can send a payment execution request to a bank in Spain, which the bank in Spain will field and complete, and it will then forward it to a second payment system, let's say in North Africa. Those of you who've been paying careful attention will doubtless see that this has the dreadful characteristic of being a two-leg payment. So if the first leg succeeds and the second leg fails, you've got to give everybody their money back in the first leg. However, their general definition of that is wider. They don't see that it has to be a two-leg payment, though they're not quite sure at the moment what something that isn't a two-leg payment would look like. Anyway, we are attending, or the Mojaloop Foundation is attending that task team, though not, as I say, with great optimism. Next up is fostering harmonized implementation of messaging standards, aka the ISO 20022 task team. And this is designed to basically derive a list of ISO 20022 messages and, in some ways of using messages, which can be standardized across border payments. The idea being that if someone emits a payment execution request that is legitimate according to the harmonized message standard, then it should be executable by recipients in principle anywhere in the world, other things being equal, of course, like ability to settle and those kinds of things. That's been going for some time. They have a set of messages. It's obviously related to there's a SWIFT initiative also on cross-border payments, and the two standards are quite close to each other. However, I also want to say that there are no agreement of terms messages, no pre-validation messages in it currently. I mean, not even the existing ISO 20022 messages. So although it's pretty good from the payments execution point of view, it's completely bad from the agreement of terms point of view. I have spoken to I'm a member of that group, and I have spoken to the convener of the group to say we should really think about this. However, I suspect that they will not be very interested in this in the near future, and that we will have to do this ourselves. So here we come to task team 4, which is the interesting one, and this is promoting the use of pre-validation application program interfaces. This task team, I have the honor of being co-convener. The other co-convener is someone from South Africa's TCIB system, so that you can see that this particular group has strong continental representation. I'll talk a bit more about that a bit later on, but that's something where we are definitely hoping to do some work, and indeed to feed the innovations of the Mojaloop system through into the wider world of payments. And finally, we have one that is direct access to payment systems for non-banks. Now, I should say that when this group says non-banks, it doesn't mean non-banks in the sense that we would understand them. That is, it doesn't mean mobile money systems, credit unions, MFIs, those sorts of people. It means institutions like Wise. It means the neobanks. Now, there are some payment systems in the world that do allow neobanks access. Pay.uk is one example, or whatever it's called now. But in a lot of cases, payment systems, both jurisdictional and regional payment systems, don't allow neobanks to join their systems. And this is essentially a pressure group to allow non-banks, neobanks, to join existing payment systems. We've joined that with a view to saying, well, hold on a minute, neobanks aren't the only kinds of non-banks that need to join payment systems. But I'm not sure that it will be a good idea to get our hopes up there. So those are the 5 CPMI task teams. One of the things that I would like to say is that if anybody is interested either in finding out about what's going on in the task teams or in suggesting directions in which they might go, then please do get in touch with me. I'd be very happy to hear from you and very interested in anything you have to say. Okay then. So I'm now going to go on to the question of a pre-validation taxonomy. Now, this is a candidate because it's produced for the CPMI PI task team that we just talked about. However, I think it's the idea is that it will provide a general way of structuring kinds of pre-validation so that people can understand what they are and the differences between them. So, first one is verification that an identifier which the payer knows can be resolved to an account which a PSP, as payment service provider, there you can see the CPMI terminology, which can receive funds. And that's what essentially we call address resolution. I send a Misden to some system, and the system says, oh, okay, this needs to be routed to DFSP X over there. So that doesn't say anything about the account except which institution holds it and that the account is open and can receive funds. Next, the verification that the entity which is going to be paid really is the entity that the payer intends. And this is the one that we normally call name recognition. So as part of, well, in our case, as part of the first address resolution thing, the payee DFSP will send back the name of the account which they intend to pay. And the payer can look at it and say, oh, am I supposed to be paying Paul Makin? I meant to pay James Bush, and reject it. This, as we know, is something which has been a godsend to payment systems throughout Africa and indeed, I think, throughout the world. The ability to check mistypings on Misdens and things like that by saying, are you paying the person you really want to pay? Next, verification that the parties to the payment may legitimately make or receive it. That's compliance checking, and you will often hear it referred to under the term FATF Recommendation 16, which is a recommendation about combating the financing of terrorism and money laundering. And essentially, the FATF recommendation places on the parties to a payment, or the parties of some payments, I should say, the responsibility for evaluating who's actually making that payment and whether they can legitimately do so. So that's an important, a fundamentally important thing in cross-border payments. It may also be an important consideration in domestic payments, but on the other hand, in a lot of cases, domestic payment systems do not require their parties to assess the legitimacy of payments in a general way, though they may, and frequently do, require participants to check that the parties to a payment are not on a domestic AML or PEP list. Okay, so that's the third. The fourth is a verification by the payee's DFSP that the payment proposed by the payer can be made, which may include requests for and provision of additional information. And that's what we call agreement of terms. The sender, the payer institution says, this is the payment that I propose to make. And the payee institution says, okay, I accept that proposal, and I send it back to you saying, this payment can be made on those terms. And then we add one more thing to that, which is a warranty by the payee's PSP that the payment will be accepted and the payee's account immediately credited. And that is what we call the condition fulfillment pair that in the Mojaloop schemes is used so that the payer can be confident that if they send the funds, the payee's account will be immediately credited with them and that they will get immediate and reliable notification that that's possible. That payment has been made. So those then are the 5 categories of pre-validation that we think exist. In the rest of this discussion, I'm going to assume that by pre-validation we mean level 5 pre-validation. I understand that not everybody wants to have level 5 validation, but that's the sense in which I'm going to use it in the rest of this discussion. Now, let's see how these ramp onto ISO 20022 messages? Now, the short answer is there are not yet official ISO 20022 messages which really answer to the requirements of the pre-validation types that I've outlined previously. I know that existing schemes have used particularly account management messages in ISO 20022 as a way of, I'm going to say, simulating the first two of those categories, that is to say, account validation and name recognition. However, those messages are not really intended for that purpose. Their intention is for someone who holds information about an account to contact the account holder and say, is the information that I hold about that account correct or not? That is to say, it's a confirmation thing rather than a request for information, which is what we want. So I'm happy to report that there has been some activity in the ISO 20022 area, and there is a new message proposed with that title. Well, actually, the A means it's been proposed as an API rather than a message. Now, this doesn't mean anything very much to us because we use APIs anyway, but it means something in the ISO 20022 world, which is still largely message-oriented. Now, what this means, I think, is that although an API will be the first manifestation of this structure, it could also be a message. So my expectation is that that will be the message which is used to ask whether, also to ask which DFSP is responsible for a particular an account represented by that particular identifier, and whether that account is open to receive payments. Name recognition is part of the same thing, because the response to a request can also include name recognition, can also include the currency of the account, and an indicator to say whether the account can be paid in the proposed currency, if the proposed currency is specified by the sender. So both of those are covered by that one message, PAX A01. So the situation in the ISO 20022 world with that is that the business justification for it has been accepted, and the content of the message itself is currently being reviewed by the ISO 20022 API support group and by the payments special interest group. So it's on its way. I'm not quite sure when it will arrive. For compliance checking, we have a pair of messages, PAX 032 and PAX 033. These are messages which are proposed by the Mojaloop Foundation. The business justification for them has been accepted, and it's currently going through the modelling phase, which is done by Swift. But in principle, we will see these messages arriving in the ISO 20022 message set, hopefully this year. You will see that they've been given an official name and an official number, which is a good start, and we're hoping that they will appear in the near future. Now, the next two also use PAX 032 and PAX 033. In the last case, just PAX 033, which is the confirmation. So, coming out of that is the idea that for Mojaloop systems which use ISO 20022, which, as far as I know at the moment, is most of the implementations actually proposed, there are or will be ISO 20022 messages and API versions of them which can support all the levels of pre-validation that we want to support. We also have permission from the ISO 20022 organization to go ahead and implement these messages as we expect them to be proposed. They are keen on that because it gives them real world usage to make sure that the messages do meet requirements. And we had to agree, which of course we did, that we would make some changes if the versions eventually approved were not exactly the ones we were doing. So, good news on that front. We have API candidate messages in ISO 20022, which cover all of the phases of pre-validation. So, now let's move on to, let's say, more theoretical matters. What's the point of pre-validation? Essentially, it's to reduce the number of rejected payments to zero, which means saving money, time, and effort on reconciliation. It means avoiding disputes between participants, because disputes between participants are, generally speaking, about failed payments and not about successful payments now that we have name recognition. And also to ensure that participants can safely transact with participants which are regulated in different ways. Now, one of the things that Mojaloop really wants to support is the ability of entities of very different kinds, payment service providers of very different kinds, to interact with each other without needing to make allowances for each other. So the idea of the Mojaloops, or the idea of a Mojaloop system, is that it doesn't matter whether you're a Village Savings and Loan Association or JP Morgan, you interact with a Mojaloop scheme in exactly the same way, and the person on the other, the entity on the other side, has no obvious way of telling what kind of entity you are. Now, that means that entities which are regulated by different regulators or by the same regulator but in different ways will be exchanging payment requests with each other. And that means that different institutions may have different requirements. They may not be able to accept payments of some kinds. They may have requirements that other ones don't. The agreement of terms phase means that institutions can exchange this information before any of them has to commit funds to the payment. And finally, we need to be able to ensure that variable participant responses can be correctly registered in the payment chain. And by variable participant responses, I mean the fact that in a number of kinds of institutions that we deal with have what we call tiered KYC. So you can join these systems, mobile money systems are an obvious example. You can join a mobile money system with very little KYC. And in some cases, for instance, in Nigeria, there isn't even a requirement on the registering institution to validate that what you're telling them is your date of birth really is your date of birth or your address. The risk associated with allowing accounts to be opened in that way is mitigated by the fact that people aren't allowed to send very large amounts, people aren't allowed to hold very large balances. In fact, the balances are quite small and the amounts are quite small. But that means that you can't know in advance which level a particular customer is at without asking the DFSP, because only the DFSP knows what the KYC tier of a customer is, and therefore what funds they're allowed to receive. That's even more problematic because in some cases the restrictions are to velocity, the number of payments that an account can receive in a week or a day, or to balance. So people are only allowed to hold a certain balance in their account. So anywhere where there are variant participant responses, you must have pre-validation in order to understand whether a payment can be made or Well, you might say, are there any alternatives to that? And my answer is, well, sort of, yeah. First of all, you might say, well, you send the transaction anyway and reject it. The receiver can reject it if there are aspects of the payment that mean that they can't accept it. Another version of that is what I would call transaction ghosting, which is to say you receive a transaction request, but if it's not one you can respond to, instead of actually responding and say, sorry, I reject this, you just ignore it. And the other one is scheme rules, which sometimes are supposed to be able to stand in for the automated payments. However, that means that the operators of the scheme need to be monitoring and making sure that people really are acting in the way the scheme rules say they should act. It's obviously cheaper and more effective to have that process automated so that people have to respond. Now, transaction rejection is a possibility. The problem with it is that anything which introduces an additional action which all of the parties have to execute introduces a possibility for error. And in particular, one of the things that we are trying to do with pre-validation is to make sure that when the debtor party, the payer party, sends a request to execute a payment, it can be as confident as it possibly can that that will succeed, because it's going to be reserving its customers' funds. In some core banking systems, that means actually moving the customer's funds to a different account, a suspense account, for instance. And they don't want to do that unless they can be confident it succeeds. Because if basically we allow requests to be rejected if they don't meet the requirements of the receiving institution, then the sending institution has to be sure to return the funds to its customer and to return them in a timely fashion. And that's the area where potential disputes and potential reconciliation problems arise, because if the sending institution doesn't do that immediately, or doesn't do it at all in some cases, that's when customers say, hey, you took my money and you never gave it to my old mum. So there are alternatives, but we think that they are not as effective as pre-validation itself. So let's look at how Mojaloop implements pre-validation. Now, we support all the categories of pre-validation in the API. You can see that there are API endpoints that enable all of the categories of pre-validation that I've talked about. But the problem is this issue isn't about the API, and it isn't about the switch. It's about the whole system. So you can see that the Mojaloop switch interacts with protocol converters. At each of the DFSPs has one of those, and those protocol converters interact with the core banking system and perhaps also separately with account and customer data that it needs to understand about, for instance, to know what the level of KYC in relation to a particular account is. Now, that means that not only does the Mojaloop switch need to be pre-validation aware, which of course is not too much of a problem, but the DFSPs or their protocol converters need to be also available. I'm using protocol converter here as a general term for things that you might know as payment manager or integration toolkit, that kind of thing. The things that convert between the way in which the core banking system and the account and customer data do things and the way in which the Mojaloop switch does things. And it isn't even just about the DFSPs. It's really a question about where and when investment is made. And the reason I say that is because it's certainly possible that you might look at a system in the very early stages of development or in the very early stages of implementation and say, well, this system doesn't really do anything that needs pre-validation level 5. However, you will definitely need pre-validation if you're going to support cross-border payments, if your scheme includes participants with variable KYC, if your scheme includes participants who are regulated in different ways. Now, if there is a possibility that your scheme is going to need to accommodate those sorts of things, then at the time when you do, you will need to be able to support pre-validation. So you might say, well, okay, we'll start without pre-validation and we'll add pre-validation to the scheme when we need to, when one or other of these considerations becomes a reality. Now, that's what I would call just-in-time pre-validation. Now, let's look at what happens with just-in-time pre-validation, by which I mean we start a Mojaloop scheme without pre-validation. People join the scheme, payments are made through the scheme, and then at some later point, people say, oh, hold on, we're going to do cross-border payments, or we're going to include institutions which have variable KYC. So now we need pre-validation. First question, can a Mojaloop scheme support a configuration where some DFSPs use pre-validation and some don't? My answer is yes and no, unfortunately. So my answer is it can support a configuration where some DFSPs support pre-validation but don't use it, and other DFSPs do use pre-validation. But it can't support a configuration where essentially some DFSPs simply reject pre-validation requests because they don't understand them or don't support them. Now, that way madness lies, because participants will never know whether they should send pre-validation requests or not. And it destroys the level playing field between institutions of different kinds, which is a fundamental principle of Mojaloop. So it can support a configuration like that, as long as the DFSPs who don't need to use pre-validation, if there are any, essentially provide a simulated pre-validation so that all DFSPs always send pre-validation requests, and some DFSPs, if they are confident that they can, approve those automatically. So the answer basically is, if some participants require pre-validation, then all the participants must be capable of supporting it. And this isn't simply a question about small institutions. It can just as easily be a question about large institutions in a Mojaloop scheme, if those institutions want to support cross-border payments, because as we've said, where you support cross-border payments, you're dealing with institutions which are regulated in perhaps in quite different ways. And you definitely need a pre-validation phase to ensure that the payment you're proposing can be made. So if this doesn't happen when the scheme is set up, what needs to happen? First of all the participants will need to upgrade. As we've said before, if some participants require pre-validation, then all must be capable of supporting it. And that's the case even if those participants won't themselves need to use it. Again, go back to the example I said where large institutions want to do cross-border payments, small institutions might not. The small institutions now have to install pre-validation in any case, because if some people are using pre-validation, everybody needs to. And finally, all the participants will need to upgrade at the same time, because, as we've said, if some participants require pre-validation, all must be able to support it. So you have made an extremely complicated situation for yourself. So you need to, if you wait to install pre-validation and do it just in time, First of all, because everybody has to have it, even people who don't need it. So you're asking some participants to essentially to incur expense for no obvious benefit. And second, you need to coordinate everybody so that everybody moves up to the pre-validation version at the same time. Otherwise, chaos will ensue. So broadly speaking, these, I think, are quite strong arguments against just-in-time pre-validation. If you think you might be in a situation where you will need pre-validation for the reasons I've talked about, then it's much simpler and easier to include pre-validation when you set the scheme up than it is to do it after the scheme is set up. So my conclusion is there's going to be a world of international payments. Everybody is moving towards the idea that domestic payment schemes are going to need to support international payments in some way. And that's the more important because more and more we're seeing situations where when people go to work and contribute productively to other jurisdictions' economies, they don't, as a consequence, obtain the right to live there. And therefore, they are going to need their need to send funds home to their home jurisdiction, where they will eventually return, is much more important than it was hitherto, when large numbers of people essentially wound up as citizens of the countries where they were working, contributing productively. Mojaloop schemes, we think, will be able to join that world, but only if they implement pre-validation. So I want to say, in our view, pre-validation is a fundamentally important building block for jurisdictions across Africa and Asia to join the emerging international payments network and to become properly functioning and contributing partners to it. That's all I have to say. Does anyone have any questions or comments?
Your timing is impeccable, Michael. I was just about to give you the 5-minute warning. So perfect. Thank you. Personally, I don't have questions, but I'm very keen to give time to the audience to raise questions. In particular, WitseWorks. There are a number of people from WitseWorks here. Would anyone like to make any comments about what Michael has presented today and your experience? I see a lot of the WitseWorks teams have actually just logged off in the last few minutes. That's disappointing. They knew I was going to ask them questions. Okay, then since they've all just left, anyone else like to ask any questions?
Sorry, I'm going to stop sharing so I can see the chat and things like that.
Yeah. Nope, not getting any questions. That is really frustrating that WitseWorks all just left just before you finish. Anyway, never mind.
I'd slipped him a tenner.
Okay, well, thank you, Michael. If we don't have any questions from anyone else, then that's fine. If anyone thinks of any questions later, you know where Michael is, you know how to contact me, so please get in touch. And I'll share the recording of this session later on today. So thanks, everyone, and goodbye.
Thank you. Good night.
Thank you.
Thanks
Thanks
all.
very much. Bye.